With a high estimate of 33 and a low estimate of 3.5, the 8 analysts providing 12-month price targets for GameStop Corp have a median target of 12.5. The stock of GameStop had a short interest of more than 100%. Using a clever mix of common stocks and call options, you can make much money. The median estimate is down 95.25% from the previous price of $263.01. The current consensus among 8 investment analysts polled is to keep GameStop core stock. Since January, when it was unchanged from a hold ranking, this rating has remained stable. The group successfully increased the price per share, causing many short sellers to close their positions, resulting in huge losses. GME's earnings per share are $1.35 and its revenues are $2.2 billion. Okay, this one is popular because it is required for most companies with an online presence. Subscribe to the Stock Monster for more riveting material if you want to stay up to date on the top new inspiration to grow financially. Stay with us with only one click on the bell icon. Let's begin with GameStop predictions and is it the best time to trade GME? Predictions. The act of predicting the future value of GameStop core shares using a variety of traditional methods such as EPS estimation, analyst consensus, or fundamental intrinsic valuation is known as stock price prediction. A good prediction of the future price of GameStop core stock could result in a sizable profit. It's debatable whether stock price forecasting based on financial news information will produce a powerful buy or sell signal. People estimate GameStop core's worth using an internal news filtering technique focused on various types of headlines from major news networks and social media. The GameStop stock price prediction module examines GameStop core's price elasticity to changes in media outlook over a given investment horizon. People can estimate the value of GameStop core based on its reaction to recently created media speculation and the impact of current news on its competitor using GameStop core hype-based prediction. However, it is already up 928% in the last few weeks of 2021. Interest coverage is a forecast to increase to 37.36 this year. The calculated tax rate for this year is expected to rise 32.76%. This module is based on a study of investor sentiment about a potential investment in GameStop core. This speculative approach is solely focused on the belief that market emotions such as investor anxiety and greed drive markets. Fear of losing out, or FOMO, will cause potential investors in GameStop core to purchase its stock at an inflated price. In that case, they are purchasing GameStop not because the equity is a profitable investment, but because they must act to escape the feeling of being left behind. During bear markets, on the other hand, investors will often sell stocks at rates well below their worth to avoid the pain of losing money. GameStop core after hype prediction price. Using hype analysis or a similar statistical method, there is no clear way to calculate investor sentiment. Stock price forecasting, technical research, analyst consensus, earning predictions, and various momentum models can all be used in conjunction with this prediction process. Investors who correctly predict the stock price of GameStop core may make a substantial profit. According to the efficient market theory, all publicly traded company stock prices, such as GameStop core, already represent all publicly available information. Many financial and investment ideas use this academic statement as a guiding concept average investor. On the other hand, it typically disagrees with a textbook version of this theory and is always looking for mispriced stocks to boost returns. Based on an analysis of GameStop core's news, social hype, general headline trends, and commonly used predictive technical measurements, people use internally developed statistical methods to arrive at the intrinsic value of GameStop core. They also measure market risk exposure, various technological and fundamental metrics, and relevant financial multiples and ratios, and compare them to GameStop core's related companies. We value your enthusiasm, so don't forget to subscribe to Stock Monster's YouTube channel and ring the bell to be informed of new episodes. And keep watching! GameStop continues to fall after the Reddit surge. The current share price of GameStop Core is $265. GME has a score of 72, which is 44% higher than its historian median score of 50, and indicates lower risk than average. GME is currently trading in the 70 to 80 percentile range in terms of its historical stock score averages. Thanks to a concerted effort by traders on Reddit, GameStop's price soared last week. The video game store's stock increased by more than 14,300%, but it has since plunged, falling from $328 to $53.50. Fans of the stock are still holding on to their GameStop shares to show Wall Street and hedge funds who's boss, but don't be fooled. The business isn't doing so well. Indeed, one of the reasons for its meteoric rise is that so many institutional investors were betting against it to the point of absurdity. Individuals who organize their efforts online to push up the market can take advantage of this trading form, known as short selling. Stock markets have always been detached from reality for the average American, but this GameStop roller coaster ride flies in the face of rationality and simple investment concepts. That's the point, according to the Wall Street Bets subreddit. So, should people invest in GameStop now? The stock price has soared to new heights. It was up 144% on January 25, 2021, before falling into negative territory. Then it reversed and closed with a gain of more than 18%. The stock has indeed gone insane, and it continues to do so. On March 4th, GameStop plummeted as a result of trading restrictions imposed by several brokers. GME closed at $193.60, down 44% from a peak of over $500. Ted Cruz, Alexandria Ocasio-Cortez, and Elon Musk, among others, all demanded to know why the stock was being restricted from trading. Robinhood was served with 2 class action lawsuits. Citadel was forced to issue a statement claiming that it had no input into the decision to impose trade restrictions. All in all, a giant mess. Now people could make an argument for GME stock to keep going higher. There are probably some shorts still hanging on fundamentally, and the company did announce strong same-store and digital revenue growth during the holiday season a few weeks ago. But in reality, it's dangerous to trade GME right now. For starters, how overbought this stock is, and many times when these stocks fall, they fall fast. In recent years, GameStop GME has gotten much press. Since the beginning of the year, the stock has doubled, quadrupled, and is now up about 16 times. This is thought to be due to retail interest sparked by Wall Street's Reddit message boards. Relatively small part. Even at its present lofty valuation, GameStop is worth about 0.1% of the S&P 500 and has been trading at what could be called outrageous rates for just 2 weeks, if that. A small stock trading out of line for a week or two does not negate the notion that markets are generally successful. In terms of market value, GameStop is currently comparable to Delta Airlines DAL or Bridgestone Tires. And if that changes tomorrow in one way or the other, it only represents a small portion of the industry. To fit the size of Apple AAPL, it would have to increase by a factor of 100. The reward ratio may be in the middle. Another test is to see where the free money can be produced if the markets aren't successful. Some people are concerned because there is no free money on GameStop in 2021. Will anyone short it if those who have done so had their hedge funds shut down and the costs of shorting have increased significantly? There are also rumors that those who bailed out of the shaky hedge fund might now be in trouble as well. Perhaps it's not a winning trade if a long-term winning trade ends your hedge fund and even disrupts the company that's trying to bail you out. Ultimately, prices are where buyers and sellers meet. Finally, prices are at the point at which buyers and sellers collide. No one claims that competitive markets are broken when a business set to be taken private at a fixed cash price does not see its stock rise when it records a good quarter before the transaction closes. The process is identical in this case. There is a problem with forced stock buyers rather than conventional forced sellers. On recent results, short interest in GameStop was over 100%, and many of those shorts are being pushed out of the trade for reasons ranging from risk management to margin calls when people need to purchase a large quantity of stock in a short period. Seeing the stock price increase is economics at the most basic stage. These were the information on GameStop predictions and the best time to trade GME. Make sure to leave a like and subscribe so you can join the Stock Monster squad and be a part of our channel. Thanks for watching!